Billionaire's $10 billion gamble. No research. You've heard it 1,000 times, research first, invest later. But Stan Druckenmiller didn't just ignore that rule, he crushed it. Here's the kicker, Druckenmiller often invests before he fully understands the asset. Why? Because overanalysis paralyzes. The average investor spends 40 hours researching a stock. But elite investors? They act fast, then learn on the fly. So why does this work for them and backfire for you? That's next. You ever wonder why some investors seem to win before the race even starts? That's no accident. It's Druckenmiller's rule in action *, invest first, investigate later *, and it works for 3 brutal reasons. First, speed. Druckenmiller doesn't wait for perfect data. He acts when momentum's building. Like 1992. He shorted the pound before the Bank of England caved. Why? Because by the time everyone agrees, the move's over. Second, conviction. You don't bet big unless you feel it. Druckenmiller's rule forces you to commit emotionally. That's how he avoided paralysis. No overthinking. Just action. But here's the kicker, the investigate part. He doesn't just set and forget. He digs after the bet. If the thesis weakens, he exits. Fast. So why does this rule work? Speed, conviction, and relentless refinement. But here's what nobody tells you. How does Druckenmiller avoid catastrophic losses when the bet goes wrong? That's next. You've seen Druckenmiller's wins, 30% returns for 3 decades. But in 2008, he broke his own rule. He bet against the market *big*, and lost $2 billion in weeks. But here's the twist, his failure proves the rule works. He admitted it, pivoted, and still retired a legend. So what's the lesson from his biggest mistake? Open loop. You're about to see something that sounds crazy. Stan Druckenmiller, one of the greatest investors of all time, made billion-dollar decisions in seconds. Not hours. Not days. Seconds. But here's the thing, he wasn't guessing. He was recognizing. We left off with Druckenmiller's biggest mistake, betting against the market in 2008. But why did he break his own rule? And what's the lesson for you? Therefore, the real question isn't if you should act fast, it's when. Research from Harvard shows experts make decisions 5 times faster than novices. Malcolm Gladwell calls this thin slicing, the ability to find patterns in tiny slices of information. But here's the kicker, it's not magic. It's training. Animation, brain scan highlighting the prefrontal cortex, then flashing pattern recognition in bold. Druckenmiller didn't just wake up with this skill. He spent decades refining it. I've been doing this for 40 years, he says. I can see the pattern before the data confirms it. Therefore, your gut isn't a hunch, it's a pattern recognition machine. But here's where things get tricky. Daniel Kahneman's work proves even experts get it wrong when they overthink. The key? Acting before analysis paralysis sets in. So how do you know when to trust your gut? That's the question we'll tackle next. You ever have one of those moments where you think, this is it, I've cracked the code? That was me in early 2025. I just watched Druckenmiller's 2009 talk for the 10th time. And I thought I can do that star. So I picked a small cap stock. It had everything, momentum, volume, a catalyst. I pulled the trigger. $5,000. Not life-changing money, but enough to feel it. The first hour? Pure adrenaline. I was fast. I was decisive. I was Druckenmiller. Then the market turned. 3 days later, I was down 20%. Here's the thing about Druckenmiller's rule, it's not just about speed. It's about conviction. And mine? It was paper thin. I had the speed part down. But the judgment? That's where I failed. I learned 2 things that week. 1. Trusting your gut isn't about how fast you act. It's about how deep you've thought before you do. And 2. Even the greats get it wrong. So here's the question I've been asking myself ever since, what's the difference between Druckenmiller's gut and ours? You've heard the stories, Stan Druckenmiller turning $1 into $2.9 billion in 30 years. But here's what they don't tell you, his gut wasn't magic. It was math. Remember that question from earlier? What's the difference between Druckenmiller's gut and ours? It's not instinct, it's ironclad rules. And the first rule? The 2% rule. Never ever risk more than 2% of your capital on a single idea. Wait, 2%? That's it? Yes. And here's why: Druckenmiller didn't just win big. He survived long enough to win. But here's the kicker: most investors ignore this. A 2025 study found that 87% of retail traders risk at least 10% of their capital on a single trade. Therefore, they're not investing, they're gambling. So how did Druckenmiller scale in and out? Position sizing. He didn't bet it all at once. He averaged in. If a trade went against him, he cut losses fast. If it worked, he added more. And stop losses? Non-negotiable. Druckenmiller's rule: if a trade drops 5%, you're out. No debate. But here's where things get dark. Most investors know these rules. They just don't follow them. Why? Because hope feels better than math. Now pay attention to this part, because this is what nobody talks about. The 2% rule isn't just about survival. It's about freedom. Freedom to take the next trade. Freedom to wait for the real opportunity. But here's the loop I'll leave you with: how can you apply this rule without gambling? Because 2% isn't just a number, it's a mindset. And that's what we'll break down next. You've heard the rule. You've seen the numbers. But here's the question no one's answering: is this even investing? Critics call it gambling. Pure and simple. This is reckless. It's not investing, it's speculation with a fancy name. But here's the thing: the best investors in history do this every single day. Stan Druckenmiller? Ruthless concentration. Warren Buffett? Diversified patience. Two legends. Two opposite approaches. So who's right? Therefore, the real question isn't if this rule works. It's can you handle the volatility. But here's the middle ground no one talks about: you don't have to go all in. Druckenmiller bet big on his best ideas. Buffett? He hedged. Therefore, you can adapt, take the principle. Leave the recklessness. But here's what nobody tells you: this only works if you're honest with yourself. Can you stomach a 30% drop in a single week? Text overlay: the great investing debate, because that's the price of admission. And if you can't? That's okay. There's another way. But what's the right way for you? That's the loop we're closing next. Remember that question we left hanging? What's the middle ground between Druckenmiller's gut and your spreadsheet? Well, here's the answer: it's not either or. It's both. But you've got to start small. Druckenmiller didn't swing for the fences on day one. He put 1 to 5% of his portfolio into what he called conviction bets. That's your sandbox. Your lab. Where you test your gut without betting the farm. But here's the kicker: those bets weren't just guesses. Druckenmiller spent 80% of his time researching. The other 20%? That's where he trusted his intuition. And you can train yours the same way. Here's how: every time you make a trade, write down why you did it. 3 months later, check if you were right. Druckenmiller did this for decades. That's how you turn gut feelings into data. Now, let's talk about where to apply this. You don't need to pick stocks to use this rule. ETFs. Index funds. Even crypto. The principle's the same. Your 80%? That's your boring, safe core. Your 20%? That's your edge. But here's where things get interesting. Druckenmiller's rule isn't just about making money. It's about learning. Every bet, win or lose, teaches you something. And that's how you build real confidence. Not from books. Not from gurus. From doing. This video is for educational purposes only and does not constitute financial advice. Always consult a qualified financial advisor before making investment decisions. Now, here's the question I want you to sit with: what's the biggest takeaway from Druckenmiller's rule? Because the answer might surprise you. You've heard the rule: go big or go home. But here's the part no one tells you. It's not about recklessness. It's about conviction. Most investors? They lack the courage to act. Not because they're weak, but because they confuse conviction with certainty. Druckenmiller didn't bet big because he knew he was right. He bet big because he believed he was right **, he was willing to adapt when he wasn't. That's the difference. Here's the revelation: humility isn't the opposite of conviction. It's the foundation. You don't need to be right all the time. You just need to be right when it counts. And here's the kicker: this rule isn't just about investing. It's about life. The moments that define us? They're not the ones where we played it safe. They're the ones where we trusted ourselves enough to leap. Even when the data wasn't perfect. Even when the critics screamed. So what's the final lesson from Druckenmiller's career? It's not about the money. It's about the mindset. And that's something no algorithm can replicate. You've seen the data. You've heard the stories. But here's the final lesson from Druckenmiller's career, one most investors never learn. His rule works because it forces action. Not analysis. Not hesitation. Action. Most people overthink. They wait for certainty. But markets don't reward certainty, they reward speed. Druckenmiller's edge? 3 things: speed, conviction, and humility. He moves fast, commits hard, then adjusts faster if he's wrong. This isn't about gambling. It's about owning your decisions. Starting small. Testing. Learning. So here's your takeaway: stop waiting for perfect. Start with good enough. Then improve. This video is for educational purposes only and does not constitute financial advice. Always consult a qualified financial advisor before making investment decisions. Now, what if I told you there's one more Druckenmiller secret most people still miss? You just saw the rule Druckenmiller swears by. But here's the thing: he breaks another rule. One most investors won't touch. Think you know it? Hit subscribe, because next, we're tearing it apart. But first, cut to black.